David, was on September 29th of last year, so it's not quite a year. Royal Caribbean Cruises, this one down just over 20%.
Yeah. So we're all about finding companies that are good getting better. And we will stay in the ones that work as long as they work. And we're very careful about cutting our losses short when positions don't work. You may remember in December of this past year, markets got sloppy, actually starting other places, but ultimately hit the U.S. We got stopped out of Royal Caribbean in the very end of December, beginning of January. Life goes on. But I want to make a point here. If we make 20 investments, 3 or 4 work out way better than you think. 7 or 8 are pretty good, and a bunch don't work. So having a good selling strategy and being willing to stop yourself out of positions is really, really important. And this is why very often I come here and at least one of the positions has been shot somewhere along the way. It doesn't mean there hasn't been an opportunity in a short period of time, but you just have to make sure you don't go down with the ship.
Right, and
so to speak.
Yes, yeah, exactly, yeah. And why the weakness in Royal Caribbean over the past while?
Well, really, there was big weakness from December through February.
Sure.
And that was on global growth concerns, right? And if you remember, the big concern at late last year, early this year was, is China going to derail growth around the world? And Royal Caribbean is one of those companies that's dependent on global consumption, and certainly is weak. It's interesting, the consumer discretionary sector has been relatively weak most of this year. Really, the companies that have done well have been companies like Amazon in particular.
Sure.
We'll have to see where things go from here. We're very small weight in consumer discretionary right now.
Yeah, apparently Royal Caribbean and Norwegian cruise lines have already warned of weaker prices in Europe and China.
Yeah.
Okay, let's get on to Amazon. This one up more than 50%.
Look, it's a disruptive company. They disrupted retail. They are the leader in cloud computing. They have just tremendous momentum in all of their businesses, and it's hard to see how somebody can unseat them. So I would continue to buy the stock right here. I think it has to be a significant weight in most portfolios. And realistically, the scale that they have and the scale that Google has in their business is going to be pretty hard to match.
Okay, and finally, Martin Marietta Materials. They produce aggregates for construction.
Yeah. Martin Marietta had a very good pass. We continue to own some shares. And frankly, if you think that there could be fiscal stimulus in the U.S., companies like Martin Marietta that make aggregate and gravel are going to do very, very well. It's a localized business. They have very strong pricing power. And so they'll sell into commercial construction. They'll sell into road building and bridge building. It's very specific to the U.S. market.
Yeah, that's interesting. Yeah, they do, all kind of refractory products. I guess that's for furnaces, but chemical products. And the multiple on the stock about 25 times. That's for on estimated earnings. Would that give you a pause at this stage? Well,
the thing is that they have such pricing power. It's very hard to replace them with a competitor.
Right. Nobody wants a new gravel mine. Yeah.
Right. Well, they can put pricing increases through, and it's not a material increase in expense to the company who's doing the building. So it's a very attractive business and one that should do well if there's some fiscal stimulus after the election.
So it's a bit like ice. Apparently ice is very profitable to sell, in those bags, because people really don't know how much they should pay for ice. But you only buy it a few times a year.
Well, it's not the big component in the cost of your drink.
No, that's right. That's it as well. So, yeah, so it's apparently extremely profitable, the ice business. We're going to be right back with David Burrows, President and Chief Investment Strategist at Barometer Capital Management. The topic today, North American large caps. Give David a call, 1-855-326-6266.